Hey everyone, welcome. I'm late, obviously. I thought we'd start half an hour late, and here I am 55 minutes late. I apologize for that. I was doing a live stream for something else, and so here we are late today. So once again, I apologize for that. Maybe we'll get fewer viewers today because of that, but we'll see. Hi, Illinois Grain Farmer. Hey, Richard. Great to see you guys. Thanks for joining on. So let's take a look. What happened in the market today? A little bit of a surprise from the perspective of GEX. So when we took a look this morning, Gamma suggested that that 638 was really in focus and maybe all the way up to 640. That changed a little bit after we got the slew of economic data. And actually, SPX suggested that we would go down, but SPY was still had its concentration over at 638. I was only looking at SPY for a little while, and that was my mistake. I completely missed SPX. And for that reason, I made a decision in one of my programs that made it so that we only made 3% instead of 13-14%. But it happens sometimes. But overall, even when I do exercise my discretion, of course, I'm not going to be right every single time. But overall, when I exercise my discretion, overall, we perform better. It just didn't happen today. So that gamma exposure sticky at 6:30 all day. No, but nope, today was a pullback day. SPX provided a lot better gamma exposure data or predictive power today. And we did see a pullback towards the EMA8, not quite there. So we could have a little bit more room to go. And if we look on a VIX basis, we spiked up to 16. We could go higher. So, however, this is the beginnings of a pullback. It may be all the pullback we get, depending on how strong the market is. Just like over here, we never quite touched the EMA8. The next day, same thing, never quite touched the EMA8, and it went on, and at the very least, it chopped sideways before, but from here, it dipped and sort of popped back up. But overall, we say it chopped sideways back into that EMA8 before moving higher. So we could do that. We don't have to pull back down to the EMA8 tomorrow. We could just keep chopping sideways. And a lot of that will be determined by how earnings go. Now, what's really interesting is that even though some companies are reporting better earnings than expected, good forward projections, some of them are getting punished. For example, RCL, Royal Caribbean, they reported great earnings. Their revenue was down, but their earnings are still up. Look how much they beat by. That's 7.19%. Right? In their forward-looking statements, they projected continued growth, very good forward statements, got punished by the market. Okay, so we'll see. We'll see how the rest of these earnings go. They do have the power to start moving and shaping how this goes. Overall, though, so far from what we see, we're not going to expect a huge pullback at this time. The market is still very, very strong. Let's see. John, great to see you. Vladimir, C. Fazio, great to see you. And let's see, markets. Okay. All right. So right now, I'm not expecting a major pullback, but that means if there are some interesting opportunities, we could go baby long right now. Right? Because some things would have pulled back a little bit more than market. Some things might have pulled back to their EMA8. Some things might have pulled back to their EMA20. And if they bounce off of them, then that is a good opportunity. Because overall, we do expect that this trend will stay intact and we want to buy the dip. So if there are certain sectors, certain stocks that are already dipping a little bit more than the market has dipped, then they were not at risk of pulling down and breaking through. Of course, no guarantees, but those are opportunities that we can start picking up on. All right. Finally made it a tradable day. Good, good, excellent. So again, technicals right now are not the strongest force in the market. They can be destroyed, whether it's just temporarily or long term. They can be destroyed by the things that are being operated on in the market. We have FOMC tomorrow, but really the market has priced in a 98% probability that that's not really going to go anywhere. In September, we've got an increased probability now of 65% of a 25 basis point rate cut. You can see that a week ago it was only at 58. A month ago it was actually higher. That's kind of interesting to note. But we did creep back up to this 64 and change, 64.4% chance of getting that rate cut, and then a tiny 1.3% chance of getting a 50 basis point rate cut. I'm not sure. Personally, I'm not sure about September. There is nothing in this, given how strong the market is and how strong the data is coming out for the economy. There's no really good justification right now for a rate cut. And I know you're seeing news otherwise, and you're seeing some Fed speakers saying otherwise. Oh yeah, rate cut later. Oh well, 2 rate cuts this year. Why? Where does this market need to be supported? All right, so the mandate of the Fed, employment, we got great employment data still. Inflation, so we have a tiny bit of work to do on inflation still, but cutting rates doesn't help that. If anything, it would be raising rates. Right? So why should we expect a rate cut because of that? And then orderly markets. And if markets are just kind of smoothly floating up and up and up and up, I don't know how more orderly it can get. So at this point in time, right? So one of my main functions back when I was a portfolio manager was to evaluate and keep tabs on exactly what the Fed Reserve was doing. That was my job, specifically being on short term, on the short end. So we observed and we actually interacted sometimes directly with the Fed, and we were supposed to evaluate what they do. And based on everything that I'm seeing, any sort of rate cut right now would just be purely political, and it would be completely against the Fed's mandates. So personally, I'm not buying into this right here, that even in September, we've got such a high chance of a rate cut. Simply, the data simply doesn't support a rate cut yet, right? But that's what is being priced into the market. So what will either happen is they'll be right and this will increase in percentage, or they'll start to agree with me and this will start to go down, and then we'll go back up to back over to this no rate cut scenario. If that happens, then we may get that rate cut. Oh, I'm sorry, not the rate cut, the pullback, the slightly deeper pullback, the 3 to 5% pullback. Because right now what we're saying is money is being moved in a way that's anticipating to get this support from the Fed so that the markets will keep on going up. But if we don't get that support, then all of that money that moved in anticipation of that then gets pulled. That doesn't mean necessarily that we're no longer in a bull market. It just means that all the money that was like, oh, we traded based on this mode of thinking, we need to pull our money and allocate it somewhere else. So we could see a bit of a pullback if this percentage starts to head down again. And we'll see. Tomorrow has the potential, most likely not to affect anything here, because either they do it or they don't. If they cut, that's going to have a huge reaction in the market because so much has been priced already into it not happening. So the more likely scenario is that this is correct, we get no rate cut, but maybe based on something that Powell says, or if we get the dot plot tomorrow, I don't know if we get it tomorrow or in the notes, but it could, if the viewpoint of this possibility of a rate cut in September shifts, then we could still see market moves and market swing. So we'll just be ready for further volatility tomorrow and the possibility of pulling all the way back to the EMA8. If we're going to go below the EMA8, it is not likely to be tomorrow. It's not likely to just be, hey, we suddenly drop. Okay, most likely we'll move to the EMA8, and then maybe the day after or a few days after that, then we would break through it. So we do need to, it will most likely pause at the EMA8 before any of that happens. And no guarantees, like I said, it could be a float chop sideways before we touch that EMA8 again. Let's see. Hey, Dan. What kind of pullback help safe haven assets like gold? It would have to be a much deeper down to the MA50 or MA200 would start to see things move into gold. Right now, gold is having trouble because of the dollar. Right? The dollar is strong. It broke through this trend that we've been monitoring. So if that keeps on going up, then that's going to make it difficult for gold. Why? Because there's a few different reasons. One, the US dollar becomes more attractive than gold, relative to gold. So if I am a foreign citizen or if I'm a foreign bank and I say, oh, I can hold US dollars or I can hold gold, and US dollars keeps going up and up and up and up, and gold's not really doing anything, then I'm going to go over and I'm going to buy US dollars. And I may let go some of my gold in order to buy those US dollars, okay? And also, if you think about it the other way around, if gold is priced in dollars and dollars are stronger, then it should take less dollars to buy the same amount of gold. And so for that reason, gold priced in US dollars will start to drop as well. Okay, so even though we're not really super motivated by technicals, we can still try to see if money is moving around anywhere. So signs of buying or signs of selling. So I'm not going to go and look at market momentum. Well, maybe market momentum is not going to be super helpful, but we are going to see what sectors performed well today. If that translated into a week or month is a little too far out right now because we're really focused on this week. And then we can take a look and see if there's any particular sector that is just really getting a lot of attention or that is really just being shunned right now. Let's see. Many traders prefer not to short and instead move money to assets like gold. That is true as well. And some traders, some institutions are allowed to short. And so all they can do is move to an alternative asset. Right? So if we're expecting a deep pullback or a correction, then you would start seeing money flow into safe haven assets, of which gold could be one, yes. Okay. Doesn't a stronger dollar hurt the market though? Because it makes it more expensive for foreign investors. That is true, yes. So the question is, what's the balance of foreign investment versus domestic investment? All right, and if it makes it more expensive, does that necessarily mean that they're taking money out of the market? And the answer is no. So you might see a slowdown of inflow into the US market, but you're not going to see a whole bunch of people pulling out of the US market. So the money that's already invested there, as long as the SPY keeps looking like this, the American market looks phenomenal. And so you wouldn't pull money that's already invested there. It just makes it harder for you to put additional money into the US market. So maybe you don't grow as fast. Maybe it doesn't mean that you'll necessarily have a pullback or a change of trend because of that. And generally, foreign investment dollars, they're not going to swing. They're not going to change a trend. They could slow it down, but they're not going to change the direction of a trend. Okay? unless you really see that money pulling out of the markets. We don't see that too much in the US markets because US markets are very stable. They're very respected, and they are considered the safest of all the financial markets. So generally, you don't see that type of behavior in the US markets. You might see it in emerging markets, for example, where money just like, oh, we need to take our money out of this market, and just all that money leaves. Yeah, we don't expect to see that in the SPY. You can see a slowdown in additional investment, but not a real massive pull out of the US markets, unless something really crazy happens in the US. All right. Okay, great. So let's take a look at those sectors. So today, focus mostly on the one-day performance. Let me get the top 20 over here. Okay, so that's kind of interesting. So down day in the S&P, let's see how many percent down we are. 0.26, not super significant. Okay, this is really just kind of chop. So, but to see overall 1% moves in real estate, in commodities, utilities, definitely a little bit more defensive energies related to commodities. We even see XLP staples up a little bit over here. Those are all kind of interesting to see. If that continues a few more days, then we'll be a lot more interested rather than just a single day's movement. But what's really interesting is this real estate right here. Not something that you normally attribute to a safe haven, and not something that is necessarily risk averse. So you wouldn't necessarily, oh, market's down, let's all go into real estate. That's not usually how that works. So we can take a more careful look at what's going on in real estate. I know it's been showing up quite a bit, like home builders, real estate has been showing up quite a bit as a focus of money moving. And that could be an extension of what we talked about last week, where PAVE was doing very well, where infrastructure looked very well. So after infrastructure comes homes, right? If I'm building a factory, I'm going to need people to work in that factory. So then homes start being built around those factories. So we'll see. We'll see if that picture continues to develop. Right now is early, but so we'll just watch and pay attention for now. Real estate, I'm going to take a careful look at, and then actually I want to see those bottom stocks. I want to see if money really left any of the sectors. Crypto. That's interesting. And nuclear uranium, that's also interesting. Leisure, entertainment, airlines. Okay, so I wouldn't read anything into it yet. I want to see another day because we have a lot of catalysts. These are unusually high moves right here, though, in crypto. Crypto is more volatile than other areas. So again, until I look carefully, I don't want to make a big deal out of that. Transportation, though, shouldn't be at 2.8%. That would be abnormal for transportation. So we'll take a look at that. That can be affected by tariffs. It can be affected by overall economy. But we didn't see, what was consumer sentiment this morning? Or sorry, confidence, consumer confidence, higher than normal. So that wouldn't explain it. That's interesting. All right, so we'll do a little bit of digging and on the transportation and on crypto. Okay, let's look at the positive sector first. That was real estate. And not a whole lot. I mean, bigger bar. It's been volatile lately and very wicky. I would want to see it break out. Great that we made above the MA200. Great that our MA50 is now positively sloping, as are the shorter ones. Okay, so we're beginning to see some signs of life in the real estate sector. If we were inclined to make an anticipatory starter position, you could do that, a baby starter position, not a full allocation, then you could do that. And then breakout would be where you would really start to allocate. A little early, but definitely worth paying attention to. Nice strong bar right there, or the volume bar. Let's take a look at IYR, another real estate ETF, just to make sure they're all kind of showing us the same thing. And it's very similar, very similar. Okay, so definitely want to pay attention to that. I'm going to add that to my watch list. Let's take a look at crypto. And then we also said, what was the other one that we said? Transportation. UPS missed big time. Okay. Yeah. And does that reflect on wider economy? That would be really interesting. Yeah. A little bit of breakdown below the EMA20, still above the MA200 and 50. So we'll see if we get a bit of bounce right there. UPS could be drag. Yeah, that's a big red bar, but right down into support, previous lows right here. So we'll see. Tomorrow we want to see that hold, and we want to see chop or bouncing up and recovering. This red bar, though, because it's so big on such huge volume, it doesn't matter whether it came from earnings or not, is going to make this it's going to be very important to watch the range of this bar. And most likely, usually when you get an event like this out of earnings, you get this huge bar printing, most of the time is you'll be defined by that range of that bar for an extended period of time. And then the market will either break up or it'll break down, depending on what happens. But usually it means a consolidation across time, right? So what happened tomorrow, if you see a continued move, then you do nothing. That's a breakdown. And then it might continue to move for a few days and then consolidate. That often happens as well. But basically, when this type of move happens, the market needs time to digest. And here's a perfect example. Liberation Day, you can see that the UPS never recovered from Liberation Day, unlike the overall markets. This has been in a huge, massive downtrend. Look at that. That is crazy. Massive downtrend since 2022. So it never recovered from that Liberation Day. Went down and just sort of mostly chopped sideways, sort of floated upwards, and then this big, huge bar today because of earnings. And so what I was talking about there was this right here. Big, sudden, huge bar, continued movement, and then chop sideways for an extended period of time. Okay, so we see that. Huge gap down because of earnings, big bar, not a solid one, a huge shadow right there, but still moved lower, was defined by that shadow, okay? So it did trade within that range for an extended period of time. I need to change my, what happened there? How do I, here we go. That thicker, make it solid, make it a more readable color. Okay, right there, you see that it was defined by this range quite a bit. It did break out a little bit over here. You could call that a halfway gap fill back to these. Okay, so it was defined by this range until it finally broke down on Liberation Day, and then it did it again. This is a type of phenomenon, right? And especially we see it twice in a row right here. We're probably going to see something similar over here. So an interesting strategy would be 1 or 2 months, throw an iron condor around those ranges. Okay. So a lot of times after earnings, you get that volatility collapse. And then if there was a big move, you get that chop sideways. You throw an iron condor around there and you collect the time decay. The same thing happened on USO. I used this as an example in my one of my analyses. We saw that big red bar. I said, hey, what might happen is that we start chopping sideways. And then we started to get, was it USO? Maybe it was CL. In any case, a couple days later, I said, hey, if you remember, to my, not publicly, to my all access members, I said that analysis I did on USO looks like it's playing out exactly like I said, and we threw an iron condor around this, and we collected a good income. We exited, I believe, last week. So we collected all of that premium, chopping sideways. And when this happens, volatility goes way up, right? Huge red bar on huge volume. That volatility in the options goes way up. So when you throw that iron condor on, you can get a nice wide range and still collect some nice premium. And it stayed well within that range. And so that's what I'm saying on UPS as well. Okay, this huge move meant that there was probably not a huge volatility crush. Maybe even a volatility increase after earnings. Usually after earnings, the volatility crushes. But a move like this could cause volatility to stay elevated. And then if you can get continued elevated volatility, then you can get a nice wide range iron condor and just play that chop sideways. Okay, so let's take IYT, transportation. Yeah, so I would most likely expect this to come and touch that MA200. So if we see some weak transportation stocks, and only if I need short exposure in my portfolio, because this would be counter overall market trend, then I might take a put or a short in transportation. But only if I need to balance something out that I'm long on in my portfolio. I would not take a short position just naked inside my portfolio just to have a short position. Right? It would have to be balancing something else that I wanted to protect or hedge. Union Pacific is acquiring Norfolk Southern. How will that affect things? Depends on the merger. Normally mergers won't really affect the entire sector. It'll affect those two individual stocks. So Union Pacific, UPN, Union Pacific, UNP, got it backwards. So the acquiring company often goes down on the news, and then what was it, Northern Suffolk, NS? I don't remember theirs. Northern Suffolk. Am I spelling that right? Norfolk Southern. Norfolk Southern. Okay, and yeah, normally the one being acquired gets a little bit of a boost. This isn't a nice uptrend though. It broke that EMA8, found a little bit of support. That wick is a little too long. I would want to see a bounce. So it might fill the gap. If it fills the gap, it'll hit the EMA20 and then maybe bounce. So I wouldn't expect that to affect the sector, but it could affect, normally, if you know the price that they were going to be acquired at, then it goes dead, right? So it'll go flat. So probably stay away from it. But if it doesn't go flat, then that shows that the market probably doesn't really believe the news yet. And so if you see a bounce, then you can say that most likely, well, the market is not believing that it's going to be acquired. Otherwise, it would just go flat. and not be tradable. You couldn't even do iron condor on it because no one's gonna give you any money for it. Let's see. Sell one leg above yesterday's price and another below the long drop of UPS. That is going to be, are you talking about an iron condor or are you talking about a vertical? If you're talking about a vertical, you're talking about a very expensive vertical. But so I'm going to assume you mean the iron condor. So yeah, we could take a look, evaluate an iron condor. We can do that. So you know what? Let me just do it through option strat. That'll probably be a little bit more conducive. So if we go to an iron condor and we throw that onto UPS and just say we go out to mid-September and then we do nice and wide. So say like 100 and 85. Let's just try that to start. Huh, that's pretty close to what this thing did. Okay. Okay, so you see that your max loss is 383. So you can make about 35-ish% on this iron condor, which is not too bad. Not too bad for something that wide. That is not bad at all. Okay? And then of course you wouldn't necessarily wait all the way to expiration, and depending on price movement. Excuse me. So a lot of times I'll close out these things a couple of weeks before expiration. So if we gave ourselves a little over a month, about a month and a half. All right, so if I try to close it out at the end of August, okay, and we're still somewhere around here, then that represents a, see, it's this the tricky thing about whenever you pull credit, you can never rely on their profit calculations. You're not going to make 64%, right? The contract value on this is going to be 44 cents, and you collected $1.18. So what it's saying is that you make 64% of the max credit, but $1.18 minus 44 is you made 74 cents, and you should be measuring that against your risk. Okay, your capital that's actually being deployed is that risk amount, not the credit that you receive. So it should be 0.74 divided by 382. Okay, so 3 times 3.82, so 19%. Okay, so your total profit potential was 118 divided by 382. So like I said, around 30%, 30.89%. And then you would realize about 2/3 of that if you wrote it out for 2 weeks and it stayed in the relatively close to where it is right now. And then if it's right smack in the middle of that iron condor, then you could wait it out all the way to expiration and just collect the full 30 to 31%. Yeah, still a good profit for that time period. Not bad at all. If you're just collecting income, and for the reward risk that you have, it's not bad at all. No. Okay, so we took a look at IYT, and we were also going to look at block. So let's take a look at our cryptos. I was blanking on the word, what they're called. I've been talking for a really long time. So Bitcoin chopped in a sideways chop. Okay, so pretty sharp move here, sideways, but it didn't move for very long. It moved kind of a lot, but not a huge amount, and just looking for it's something, some sort of catalyst to bump it higher or lower at this point in time. Higher is more likely. Is this a correct volume print? That is pretty amazing. Okay, so to have this type of red bar volume that big, if it's accurate, we do have a very large tail right here, but then got bought right back up. That's actually a sign of strength, not a sign of weakness. Okay, so, and same with this one right here, huge red bar, quite a bit of a tail right here, but all it did was go to that EMA8 and bounce right back up. So this Bitcoin is definitely being supported, right? So the probabilities of it going higher are better than for it to go lower. Let's take a look at Ethereum. Yep. So very nice uptrend, but starting to chop sideways as well, just like Bitcoin over there. Not the same amount, same kind of volume spikes. All right. So looks like Ethereum might be beginning to chop sideways as well. Let's take a quick look at coin. Uh, 25th was a day 80,000 Bitcoin hit the market. Oh, okay. Okay, thank you for that, Sifazio. No. Okay, and then coin pulled back to the EMA20, broke below it. It's got earnings tomorrow, so that's not going to be helpful. We'll see what happens after earnings. MSTR. Yeah, same thing. Pull back to the MA50 earnings in couple days, so not too helpful. Mara, yeah, earnings is messing with some of these. Mara pulled back, so that's interesting. Earnings again. Earnings was today, and they did well. They did well. Do we have post market? A little bounce post market back above the MA200. So we'll see how Mara does tomorrow. But it does look like there is support in the markets for that. And, you know, if there was 80,000 Bitcoin dumped into the market, that dilutes some of the existing holdings that these Bitcoin treasury stocks have. So a little bit of a pullback in those names is not too surprising. So if that's what it is, then we would expect the trend to resume, unless something weird happens in earnings, but earnings were great. I don't know about forward-looking statements, but earnings were great over here. Look at this. Their earnings surprise was 2,743% better. Okay, so, and I think that what we're going to see is that these Bitcoin treasury stocks, they're really going to start outperforming expectations because of the phenomena that I talked about a couple weeks ago, which is that a lot of institutions that are locked into a 60-40 type of portfolio, or have to have a certain number of a certain amount of their funds in fixed income assets, they're going to be looking for yield, and they're not getting it from treasuries or corporate bonds. And like MSTR, Mara, these Bitcoin treasury stocks, they're putting out product that they can actually invest into, and you're going to see money run into that. I mean, 2,743% surprise on is crazy. And actually, it's probably not even accurate, because it went from it was a negative estimate and got a positive. So you can't really measure that. I guess if you said that, if I take 7.4 as the unit and I multiply that several times in order to get 1.96 plus the one right here, that's probably how they got their 2,743. Because normally to flip a negative into a positive, you'd be looking at a negative percentage. Mara did great on earnings. That's, if we see a recovery there, that's probably going to reflect well on other Bitcoin treasury stocks. And so you might see that float upwards. It won't necessarily affect Bitcoin itself, but at least the Bitcoin treasury stocks will likely be correlated to each other and move upwards. Let's look at GLXY. Okay, so yeah, you can see pullback in GLXY, but you can see that post-market it's up a good amount as well. Okay, probably in sympathy. Does that happen in MSTR? Oh, baby effect in MSTR. And then HUT8, I think was the other one. HUT. And not really seeing that in HUD 8 though. Okay. Looking at Mara, and I see a huge cone-shaped channel. A bounce there would be implied price target higher than 23. Cone-shaped channel. How long term are you looking, Rich? Looking at this? No. But in any case, yeah, there is support here. It is probably going to bounce, and then we'll take it from there. It has to overcome this resistance here. That's pretty strong resistance. A lot of supply right there. Okay. All of this. If I threw a volume profile back to here, you would see a big bar right here. From April to now. Yeah. Yeah. Okay. Oh, I see what you're saying. You're saying you're looking at it like this. Higher highs. Like that. Yeah. Yeah. So this would, if you're expecting a channel like this, then what you're saying is that high volatility, right? That's why the prices expand like that only on high volatility. So you're expecting high volatility in Mara if you're expecting that to be reached. Okay. MSTR must have also been affected. Yeah, it looks like all these Bitcoin treasury stocks are hit with that supply. Okay. And so I don't see these pullbacks as a problem. Those are the types of things that get absorbed by the market. Right? It's not like that supply is going to come over and over and over again. And so we should recover from those. Yeah. Okay. Okay, so I'm not seeing anything too concerning at all in block. IYT transport, maybe we want to see how it reacts to that MA50, MA200 area, but again, I wouldn't be shorting this thing unless I needed to balance out my portfolio. I have a long short portfolio that's super heavy on longs, then I could throw a short on there in in transportation. But other than that, I would just sit on my hands. And then we saw real estate do well. This is a wait and see for that breakout above this recent high over here. And so really what I'd be looking for is baby opportunities because it's still early. You don't have a confirmation. You don't know if this is going to chop sideways or go further and then bounce. We don't have a bounce yet. So anything that we do right now would be in anticipation. And if you're in anticipation, not necessarily anything wrong with that, but it's just a lower win rate. And so if it's a lower win rate and you don't have a reward risk structure, then what you're saying is it's higher risk. And then for that reason, you would look for a smaller allocation, a smaller than normal allocation. So I could take a quick look at, see if we can find anything here. See how everything closed. One thing everything can take away from that is that you saw how they all behave similarly. So instead of investing in MSTR at 400, you could buy Mara at 20. Yeah, that's true. That's true. They're highly correlated to each other. And you could even try one of those leveraged ETFs. Let's take a look at MAMKR. Nope, that was huge gap up due to earnings. We have it. So right now is because there's so many earnings, especially this particular week, it's going to be hard to find positions to go into. So actually, maybe tomorrow I should be specifically looking for earnings types of plays because it doesn't look like we're going to get much else. PSX energies. Okay, this is starting, what is that? That is a EMA8 curving up to match that MA50, but that MA50 is a little weak. Not the best, but we did see energies as one of the top today. It did poke back up above the MA200. Of course, we saw that happen twice already where it got rejected. So again, I would wait for a continuation, pullback, and bounce before I'm interested in energies, because this one could just fall right back down like it did these two times. Okay, so nothing really there. What is rubric? Never heard of that. SKX, a little bit of concern. Nope, that's not doing anything. TGI. No, same thing as energy. You would want that to go up and then pull back and bounce. UNM. Nope. And same thing. So a lot of the energies are looking just like the energy sector. So I would hold off. All right, so basically what this market is saying is now is not the right time to deploy capital. Now is the time to look for pockets of volatility and deploy volatility type of strategies, which is basic earnings gives us plenty of those opportunities. So tomorrow, maybe I'll look for some earnings plays and do some examples of earnings plays. Okay. Anything you guys want to look at? Anything you want me to go over? If not, we'll just end it right here. Earnings weeks, heavy earnings weeks always makes it very hard to find decent opportunities. Always have to wait and pause because of the delay. All right. I think I've waited at least 20 seconds. I wasn't watching a clock, so I don't know. So it doesn't seem like I'm getting any questions, so we'll end it there. So be safe. You know, one of the challenges for a lot of traders is like, oh, we get bored, there's no trade, there's nothing to do, and then we feel like we got to do something, or let's do something just for fun and something interesting. So if you do that, just make baby little trades, like a $50 trade or something like that. Okay. All right, guys. Have a great rest of your day. Sorry for being late today, and I will see you guys tomorrow.